Welcome back to another video and the journey to $1 million in funding. In this quick video, we're going to be covering the trading setup that I use. I'm going to break everything down in detail, show you guys an A+ setup, one that actually occurred on Friday, June 14th, which is 2 days ago from the time of this recording that I'm doing right now. So with that being said, let's go ahead and dive into the charts, and I'm going to show you guys everything that this setup entails, how I look for this setup, the different tools that I use, and ultimately how you can use this setup and apply it to your trading. So with that being said, let's go ahead and jump into the charts. Essentially what we're looking for, the first step inside of this process, this is essentially ICT's 2022 model. So if you haven't seen that series, I would highly recommend watching that. Again, that's ICT's 2022 mentorship. It's for free on YouTube. I'll link it down below in the description section so you guys can go check it out. But essentially what we're waiting for is a run on liquidity. I am specifically looking for a run on new buy side or sell side delivery, or I should say a run on new buy side or sell side liquidity. So in this scenario here, you could see at 7:05 a.m. on June 14th, we swept below and made a new daily low. So I use these tools that kind of hint all this stuff out for me. They're kind of like lightweight algorithms, which I'll talk more about these in a future video as well. But essentially I got an alert. It said, hey, daily sell side liquidity has been taken. So at that point, I can start looking in the market for my model. So you can see here after we've ran lower, we had a shift in market structure above this high here. And we also did a few other things, like number one, we inverted a bearish fair value gap. So this is a good signature that price has strength, right? So if we've already broken above this high and broken market structure, and we've inverted a bearish fair value gap that should act as support since we've closed above it on this candle at 7:30, we also have formed a bullish fair value gap here. So we could see that here, price is trading into it. And we also have a bullish order block here. So the reason that this is a perfect A+ setup is all of our conditions are met. Most importantly, we have a run on buy side or sell side liquidity on the new daily chart, as well as invalidating a premium PD array, which was the inversion fair value gap. And we created a bullish PD array, which is the bullish fair value gap, or BISI, as well as left a bullish order block. So we have all of this confluence in here. And ultimately what we could be looking for is a simple 2-to-1 setup. So we could buy off of the BISI and we could target 2-to-1. Boom. And that takes us pretty much into this imbalance here on a 5-minute time frame. So you can obviously enter as soon as it trades in, or you can let the market play out a little bit, wait for a confirmation. So you can see how price reacts at that level. So now that the bodies of the candles are closing outside of it, you can go long. You can set your stop loss and you would set your take profit at 2R, right? So this is a very, very simple model. Again, we're just waiting for that shift in market structure after a new daily low or high has been made. And then we're using that to get in sync with the market. And again, you can target a 2R, you could target 50% of the daily candle. That is a great target. Or you could target a run on an old high or low. So we have this high here, right? That's a 0.92R. We have this high right here, and that's a 1.56R. We have this high back up here as well. And most importantly, we have relative equal highs at the top. So technically speaking, we could target a full run on buy side liquidity on the daily, which would be a 2.46R. And if we let this play out, you can see here, the market doesn't get to the highs. It comes all the way back down. You have to sit through this. And then boom, target gets hit at 1:15 p.m. So this trade would be a little bit more lengthy, 7:50 to 1:15 p.m. But again, you have this target delivered above all these highs. This delivered at 9.55 during the first macro. So beautiful delivery of price, especially for a Friday. A lot of things going on in this. I would highly recommend breaking this down, studying it, really making sure that you're getting ingrained with this type of movement, because if you catch these and they are like with the right context, you can make a lot of handles and you can really surpass kind of your own expectations of what you think you could do in the market. So I really, really recommend looking deeper into this model. Also, you can see here, this is the actual executions that I took personally on my funded accounts. So I just went long here on the buy side imbalance, sell side inefficiency. And then as we made new highs, approaching the 50% level of the daily range, I went ahead and took the full position off. So this is all you need. Again, you don't need the full entire move. I was satisfied with this. But again, if you're someone who prefers holding the trade a little bit longer, letting it deliver to your full target, totally fine. You can do that. You can keep a runner on. Me personally, being a Friday, the fact that the market delivered this movement and it was roughly about 25, 30 handles, I was happy with that for a Friday. And since it's copied across multiple accounts, it was more than enough. And I elected to take the rest of the day off. So again, this is a very high probability model, but you want to get extremely ingrained with it. And you don't want to just buy or sell any 2022 model. You want to buy or sell the ones that have taken a new level of liquidity. So for example, they've run above a high or a low on a daily chart. There's a lot that goes on at those levels. And if you drop into a 5-minute time frame like you see here, which I would recommend as the absolute lowest that you go, especially in the futures market, I would really recommend sticking to a 5-minute chart. It's way less stressful, way less mental exhaustion, and just overall a healthy time frame to trade off of in the futures markets. So with that being said, again, this model repeats day in and day out. I highly recommend you guys watch the 2022 mentorship that ICT put out for free, and then go back, study this video, go do some bar replays inside of TradingView, really get accustomed to it, because this is one of the most high probability trading models I use in my personal trading. Okay. With that being said, I'll see you guys in the next video. We'll be covering some more things like the different assets I like to trade and a whole bunch of other stuff to keep you guys updated on my journey to $1 million in funding. With that being said, I'll see you guys in the next one.